Often startups come to the market and they say, I want to be everything to everyone and compete with everything on every axis. And I think that's actually the wrong approach to take. And it's a pretty arrogant approach to think that you can compete with everyone as a startup. As you know, like ideas are pretty useless. Everyone has ideas. It's more about who can like go out and execute on the ideas to bring them to life.
Guy Young started his career in traditional finance, working in investment banking and private equity, including at Cerberus Capital. But he couldn't shake the belief that crypto could rebuild the global financial system. So he left TradFi to launch Ethena Labs, the protocol behind USDe, a synthetic dollar designed to be censorship-resistant, scalable, and stable. And Guy is building what many believe could be the future of internet-native money.
Can you give some advice for the new generation who want to get into crypto and fintech, etc., and what will be your general advice to them?
If you put yourself out there and you write interesting things, you work hard and you try and have a differentiated view to other people, you can get access to almost anyone.
Hello and welcome to Build It Up, where AI meets crypto, technology meets humanity, and East meets West. I'm Bill, subscribe now and be part of the conversation. Today's guest is Guy Young, founder and CEO of Ethena Labs, the team behind USDe, a fully backed on-chain stablecoin powered by Ethereum staking yield and perpetual swaps. Guy, thank you for joining us.
Likewise. Thanks for having me on.
Awesome. Yeah, so let's get started. Could you introduce to our audience in one sentence about what is Ethena and what is USDe?
Yeah, for sure. So Ethena issues what we call a synthetic dollar. And you can think about that as an asset that looks and feels pretty similar to a stablecoin, but is pretty different in terms of its construction, risk profile, and the way that it generates a return. So at a very basic level, you're using derivatives for what's known as like a delta neutral strategy or like a basis trade. And you're long Bitcoin, ETH, other crypto assets on one side, and then you short the same notional using derivatives on the other side. And what that allows you to do is issue a dollar asset, which we call USDe. And so we came to the market around 15 months ago with the product, and we've scaled to just under $12 billion in those 15 months. And so that's been the fastest growing dollar asset that's ever existed within crypto.
That's very impressive track record. Regarding the stablecoin, I think there are three types of the usage. Stablecoin for consumption, stablecoin for trading, and stablecoin for yield. How do you place USDe into which category?
Yeah, so I think broadly agree with your categorization around the way that people are using stablecoins. I think the area where Ethena isn't so interested to compete with other people is more within payments and integrations, like within I would call like the US financial system. So I think what you're going to see over the next few years is that entrants like PayPal, Visa, MasterCard, JP Morgan, all of these well-established financial institutions are going to be bringing stablecoin-like products into the payment system that exists within the US. I think the view that we have is that that's going to be too competitive to compete with, and you have people like Circle who are going to try and do that. And actually the history of stablecoins is that all of the money is actually there to be made providing stablecoins outside of the US and offshore to provide dollar rails to people that exist outside of the US. And so I think the niche that Ethena has found a pretty interesting part of the market to dominate is essentially trading collateral on exchanges, whether that be on decentralized or centralized exchanges. So I think one good example here is that USDe was listed on Bybit around a year ago. It flipped the USDC balances that were sitting there on Bybit by more than 2x. So right now, roughly 13% of all of the dollars that are sitting on Bybit are actually USDe rather than USDC. And we see a huge opportunity to basically replace a lot of the dollars that sit within centralized exchanges with USDe. And the basic thesis here is that when you're trading perps and you're trading futures, to have collateral that's paying you a yield is obviously just a step function improvement versus using something like USDC. And then the other area is like as a savings tool, and particularly within DeFi, where the pitch is pretty simple. When you're saving in something, being able to produce a structurally higher return on dollars is obviously just a useful addition versus something like USDT, which doesn't pay you anything.
So it sounds like in the foreseeable future, you're not interested to get into the daily payment consumption, but definitely the trading and the yield generation, like those will be your focus.
Yeah, I think that's right. And I think the cool thing about operating in big markets, which are growing so quickly, is that often startups come to the market and they say, I want to be everything to everyone and compete with everything on every axis. And I think that's actually the wrong approach to take. And it's a pretty arrogant approach to think that you can compete with everyone as a startup. I think what you need to do is be quite honest to say, what are the use cases that you can do 10 times better than anyone else in the market? And you make sure and you go and dominate within those use cases. And I think that's what Ethena has done, which is saying, if you want to go be a payment stablecoin or integrate for consumption in the way that you described it, I think Circle can go and compete with Visa and those type of businesses doing that. We're happy just competing in the areas that we know we have a unique edge and trying to do the best there. And the cool thing, right, is that if stablecoins are really going to where I think they're going to go, which is like $260 billion now to like $2 to $3 to $4 trillion in the next 3 to 5 years, you can still be just a segment of the market, 5-10% of that market as it's growing. And that's an incredible outcome for everyone that's involved. So that's how we sort of think about the world. Yeah.
Is this your first startup?
It is, yeah.
But you speak sounds like a serial entrepreneur or giving the speech in YC.
Maybe I've learned a little bit in the last year to 2 years. The funny thing was that actually in my previous job, I used to work at a hedge fund and a private equity fund, and I only managed like 2 people in my team. So I never had experience managing more than 2 people before I started this. So it was a pretty quick learning process that I needed to adjust to when I came into this, which I didn't really even know how to manage a team when I started Ethena. So it's been a cool learning experience for me. Yeah.
And I wonder, when is your pivot time? Because a lot of media talking about, guy read the article from Arthur Hayes and then he made up his mind. Could you talk about the story behind the scene, how you get into the rabbit hole?
Yeah, for sure. So I'd actually been involved with crypto last cycle, just investing on the side of my day job. I found DeFi like very beginning of 2020 before the COVID crash. And I just thought it was a super interesting piece of technology. It was less around the decentralization piece. The thing that I found interesting was like these DeFi applications, you don't need 2,000 people to run them. You can have 20 people and billions of dollars are coming in and out of this thing from all over the world. And this idea to me that like money could move around the world at the speed of the internet and that these businesses could like scale or finance could scale at the marginal cost of software for the first time. To me, it just felt like a very interesting like investment opportunity rather than something, rather than being inspired by like the idea of decentralized applications. And so, yeah, I was involved in the space last year. I nearly joined one fund at the top of the last cycle, and I thought I just wanted to make the decision when it was in a bear market, because I think generally the people who do the best, you leave your job when you're going at the bottom of the bear market, when you have real conviction about where the space is going, rather than just joining at the top when there's just froth and everyone's making money. So I quit my job actually literally 3 days after Luna collapsed last cycle, because I thought that was going to be the bottom. And then it wasn't actually the bottom, because we had FTX like 4 months later, and it wasn't quite the timing that I thought. And then, I started to sort of put together the idea in the team. And then it was actually when Arthur's article came out, it was a bit of a kick for me to just say, you need to do this quicker and you need to get to market, because once he's released that piece, a lot of people I think would be thinking about the idea. And so it was about like 3 weeks after he put the article out, I'd formed the team, got the basic sort of MVP of the product together, and then we took it to Arthur and to Dragonfly to sort of share it with them as like an idea. Yeah.
During that course, I wonder what kind of innovation did you implement different from Arthur's article? For example, you do ETH instead of the article mentioning BTC, right? What else? And what is the rationale behind this?
Yeah, so that was one piece, which was like, the interesting part was that ETH had a staking yield, right, which you could also monetize as part of like USDe. And Arthur's idea, because he obviously came from a bit of a BTC OG sort of background, he was much more focused on just Bitcoin, and we wanted to generalize that to all assets. The other thing that looked very different was that his idea was to basically leave all of the money on the centralized exchanges and sort of trust the fact that the centralized exchanges would act honest and do their job. But one piece in market structure which changed since last cycle after FTX was this introduction of off-exchange custody, which I'm not sure if you've come across, where you can basically hold all of your assets in qualified custodians like Copper, Cefu, whoever it is, 5 all these different custodians. And what that enabled you to do was actually reduce the credit risk and the counterparty risk to the exchanges by making sure that all the users' assets was always sitting within a custodian rather than on the exchanges themselves. And to me, that was a very important piece, because I think after what we saw with FTX last cycle, I personally didn't feel comfortable having users' assets sitting directly on exchanges. And so that was another pretty big difference versus what Arthur described. But yeah, I think the idea, funnily enough, it's something that people have been trying for years, to be honest. Like, there's been 2 projects before Ethena who tried to do this in 2021. They tried to do it all on chain and build all of Ethena sitting on just decentralized exchanges. And obviously it's just pretty difficult to scale that when you see the size of CeFi is all 20 to 30 times bigger than what you see within DeFi. And the funny thing is that actually a lot of the OGs who are at BitMEX sort of used to do this trade themselves, because they didn't have like USDT on BitMEX in the very early days. And if you wanted to go to dollars, you'd actually have to do long Bitcoin, short Bitcoin perps on BitMEX in order to get that position. So I think it's been an idea that's been in people's minds for many years, but I think, as you know, like ideas are pretty useless. Everyone has ideas. It's more about who can like go out and execute on the ideas to bring them to life. Yeah.
So can I understand right now you have 11 to 12 billion AUM already, right?
Yeah, that's right.
All those assets is under the off-chain, off-exchange custody?
Correct. There's not a single dollar that's sitting on any exchange. Yeah.
And I wonder, along the way, could you talk about what is the biggest challenge when you set up the Ethereum and the USDe?
Yeah, I think the biggest challenge for me was actually getting all of the centralized exchanges on our side. I think, as you've known, being in the space for a while, like the exchanges kind of keep their cards pretty close to their chest. They don't like working with each other. There's a lot of sort of rivalry and competition between different exchanges. And Ethena, I think, looked quite unique in the beginning because it was the first project that basically every large offshore centralized exchange invested into and supported getting up off the ground. So for me, it was actually more like interpersonal relationship building with people that are sitting on the exchanges, and got comfortable with the idea that Ethena could be responsible with what is a very big responsibility, which is managing 10, 15, $20 billion positions that sit on their exchanges. And so I think for us, it was less around a technical or engineering difficulty that we sort of ran into. It was more about a relationship piece and building the relationships with the exchanges so that they were aligned with Ethena, felt we were responsible and honest in the way that we behaved, and getting them all aligned to get to the outcome that we have so far.
And could you elaborate a little bit? What do you mean by the collaboration? Is it something like allow you to trade at most of the centralized exchange, or is something like what you do at the Bybit, which allow you to have the USDe over there?
Yeah, I think it's both actually. So if you think about this, when a retail user gets liquidated on an exchange, that's their problem. That's the retail user's problem, and they'll lose their money. But if something goes wrong with Ethena, then it actually causes issues now with the exchanges because of how big Ethena actually is. And so there is a trust element here, which is like, if the exchange doesn't want you to be bigger than $1 billion sitting on the exchange, that's their decision to make. And they can tell you that we don't want you to be more than X% of the contracts or whatever it is. And so a big part of this exercise was actually getting people comfortable, not only with the fact that Ethena was growing to the size that it was in terms of positions sitting on the exchange, but we also required that they let us hold the collateral not sitting on the exchange and all within the custodians that sit outside of it. And so for the exchange's perspective, that's a pretty big jump to make, right? Because you're kind of like, trusting someone at this scale, but then you're trusting someone at this scale with the collateral sitting on the custodians, not on the exchange itself. And so that was just a piece that took a while to get them comfortable with. And we can only sort of demonstrate through time in the way that we sort of behave responsibly that they could sort of allow us that trust. So I think it was a bit of that, which is just like allowing us to get this big. And then the second piece was like integrating USDe on the exchanges, which is obviously a huge distribution channel for us that we were really excited about.
I have a detailed question about the Bybit USDe. Why it doesn't show up as USDe? Because owning the USDe on Bybit by default, you are having the yield, which is different from how you earn the yield on the typical DeFi protocol.
Yeah, so for this, it was really about like when you're dealing with order books on exchanges, it's pretty clunky to have an asset that is accruing in value. So the way that SUSDe works is that the price of SUSD is increasing on chain constantly. So I think it's at like $1.20 now because of all the interest that's accrued within the token. That becomes a little bit clunky on the exchanges when you're needing to create an order book versus USDT, for example. It's much cleaner and easier to just do $1 to $1 and sort of drop the rewards that come down. I think another piece of this is legal structuring as well, which is people are generally quite comfortable with the model where exchanges can drop rewards and airdrops to their users who are sitting on the exchange. So Coinbase does this with Circle, for example, in the US, and they've been doing this for years, sitting right there in the US. And we felt more comfortable with the ability to be able to do the airdrops via Bybit to their users than doing it in like a totally permissionless way within DeFi. So we needed a bit more control and restriction in terms of like anyone being able to access this within DeFi. And a huge piece of this is actually like a KYC regulatory piece, which is like if you're directly sharing the income with people, you want to know who that person is on the other side. And obviously everyone who's sitting on Bybit and the other exchanges are fully KYC'd by those platforms. Yeah.
Gotcha. So basically holding the USDe on Bybit equal to stake USDe on other protocol.
Yeah, correct. And we can get comfortable with that because it's kind of Bybit who's doing the distribution to the users. and their KYC who the users are on the side, which makes it a bit easier to do. Yeah.
Got you. Yeah. Could you talk a little bit about, after the key sort of partners, collaboration and BD, then for the next chapter, what is your trick of the go-to-market? Is it linear or is like, non-linear based on some very key milestone?
Yeah, so I think what I've learned in the last year is that 80 to 90% of the outcome is kind of driven by 4 to 5 entities or people, if that makes sense. So like if you look at the success...
So very parallel.
Exactly. And if you look at the way Tether succeeded, right, a huge piece of Tether's success comes from 2 different elements. It's like Tron distribution to the rest of the world, people using USDT on Tron in the developing world. And then because Binance, the most liquid pairs that are sitting on BTC and ETH on Binance are USDT, everyone needs USDT to trade the most liquid pairs. And so from my perspective, we've sort of seen the same thing in DeFi where literally 95% of the balances that are sitting within USDe on chain are just with MakerDAO and Sky, Aave and Pendle. There's only 3 names that sort of constitute 95% of the outcome there. And I think what we're going to see is the same thing across CeFi and TradFi. So the way that we think about the world and the distribution is sort of a stepping stone between DeFi, CeFi, and then TradFi is the final leg that we sort of go and target. I'd say the DeFi side, we've sort of covered maybe 90% of the different areas that we can be integrated and, in place. And I think that now Ethena is probably one of the most influential protocols that sort of sit on chain. I think when it comes to CeFi, we're only, I would say 50 to 60% of our journey over there. We still haven't been listed on 2 major exchanges. And I think a big piece for us there is that if you start to unlock Binance and OKX, that really compounds the way that you can sort of grow on these exchanges. Because I think one thing that people don't realize is that USDe sitting on Bybit is useful, and it's nearly $1 billion that's sitting on there right now. But the real magic with stablecoins is when they're accepted at all of the venues, because it's extremely clunky for users to have USDe sitting on Bybit, but then they need to go to Binance and send some money, so they have to trade out and then send it to Binance, and it's an extremely poor user experience to not have the same asset sitting on all of the different venues. And I think that's kind of why you've actually seen, for example, Binance's FTUSD, I think hasn't grown to the size that they would have liked it to get to. I think it's sitting at maybe 1.5 billion. And the reason for that is when you contain a stablecoin to just one venue, it's really not that useful for traders to be able to go to different places. And so I think this actually, when you do finally get a Binance and an OKX that come on, it really sort of compounds the usefulness of USD across these venues where we think it will expand a lot more than it's sitting at right now, which is just around $1 billion on CeFi. And then I think one of the biggest opportunities for us is within TradFi. So if you think about how much money is there in the world that wants to get a double-digit return on dollars at scale, it's not $10 billion, it's $1 trillion that's sitting out there in fixed income.
I mean, even the S&P 500 in past 100 years, the compound rate is 10%. Basically, that's the most sort of a doable yield of the US dollar, right? But if you can generate another more stable yield, and that would be, super.
With no volatility, right? And this is the crazy thing, is
yes.
the S&P has a volatility of 15 or 20% annualized. So we have a graph, which I'll send you after this chat, which I think is super interesting, which is since Ethena launched, it's the S&P 500 and SUSDe, and the SUSDe line is just a straight line that goes up like this to 20%-ish return, and the S&P is this crazy line, and it just ends up at the same place after a year and a half. And we basically, the way that we characterize it is equity returns with dollar volatility, which is such a powerful thing for hedge funds who are focused on volatility, minimizing down risk, all these different pieces. Anyway, the context here is that we haven't done an amazing job of delivering this to TradFi, and I think we're at this very interesting moment in time now where the whole theme of this entire cycle is the institutionalization of the space, where real institutional capitals come into the space to participate at size, as we've seen with the BTC ETFs, the ETH DATs now, and then stablecoin growth. And I really think that Ethena's product is uniquely interesting to TradFi, which is a source of alpha and a source of excess return that's come from crypto that you can package up in a format that they can consume. And so, yeah, I think the next leg that comes from us, after CeFi, is really think about the TradFi distribution. And I think the upside here is just so immense. It's in the hundreds of billions of dollars if you can do it well. Yeah.
So if we look backwards, do you think the venue partnership really drive your growth? Or you think, your BD team to speak with the investor directly? What's the weight of the contribution?
Yeah, I think it's a bit of both. You can have an all-star BD team, but if you have an average product, you're not going to get anywhere. And then you can have a good product. But if you can't sell it to people, then it's not going to grow. So I think these things always have to come in equal measure together. But yeah, I think a huge piece of this is if you have a good product and you have a team that's driven and wanting to push it out and speak to the right people, I think that's kind of the same success story for most good products that's there. So, but yeah, we haven't got like a huge team. The total team size at Ethena is like 25 people. On the business side, it's like 5 people, including myself, who sort of do the BD. So it's not a huge team that's sort of distributing it out there. But that's, again, one of the cool things I think about crypto and DeFi is like you can have a Twitter account and 5 people, and you can access everyone in the world if you know how to do that properly. So it's one of the things that I find interesting about it.
If we take a snapshot of your user and the investor profile, what is a protocol typical user profile as of now? From the institutional, retail, what kind of people they are? And basically, where did the 12 billion come from?
Yeah, it's really is a full mix across the entire barbell. So you have like the most institutional people that you can ever imagine sitting in New York with like hundreds of millions sitting in USDe. You've got like family offices sitting in Asia. You've got retail individuals sitting in Brazil. It really is like the full spectrum of like individuals to institutions and really all across the world outside of the US for retail. I think in terms of the data that we've seen coming on our website, there's been some interesting things which I can't fully wrap my head around, but like the largest address visits in terms of country is actually South Korea. So South Koreans, I think, account for like 40% of all of the Webflow traffic on Ethena, which is a pretty crazy stat to me. And then just after
do they
that,
also participate into the protocol, or they go to the other venue?
Yeah, no, for sure. We have a pretty strong Korean community, I'd say, who are actually using the product, talking about it the whole time. And then Athena's obviously listed now on Upbit as well as of like a month ago. So we have a pretty strong Korean presence, and I think that they've always liked this idea of sort of, there's a huge bubble, I think, going on right now with stablecoins in the equity markets, at least within Korea. And I think there's a huge focus within the country at the moment just around this theme, as, you know, most people are focused on at the moment. And then funnily enough, I think the second country behind them is actually Brazil, behind Korea. And then China comes in at number 3. So yeah, it's not really like the US, it's not Europe. I think it kind of mirrors the same story that you saw with Tether, which is actually the people who want dollars the most aren't sitting in New York with Venmo and money market funds. They're sitting, you know, in Brazil and Asia and that kind of stuff.
Yeah, I think so. I think basically, you know, all the offshore market, they need a stable coin, but the onshore market, they just need a Visa and MasterCard, right?
Exactly.
I think everyone would be very curious, like how you convince the institutional investor to put hundreds of millions into the protocol. Do they have a very good smart contract expert to audit your smart contract? Like, how do you convince them? Basically, I'm asking about how do you manage your security and how do you convince everyone like we are secured?
Yeah, so I think a big piece of this is we're quite thoughtful, I think, in the design, which is like minimizing the risk surface that sits on smart contracts on chain. So there isn't a huge amount of complexity that sits within the smart contracts on chain, because essentially all it's doing is taking in dollars and then sending it to the custodians that I described. And I think this is actually a pretty healthy thing for us to do, which is like you shouldn't be trying to do jobs that you're not supposed to be doing. And custodians exist for a reason, which is to look after money securely. And all Athena's job is actually like matching together the inflows that are coming on chain with the positions that are going onto the exchanges. And fundamentally, all of the assets are sitting with the custodians that are sitting in the middle. And so there's less of a need for like TradFi and institutions to underwrite us as Ethena. All they need to do is actually underwrite the custodians who are sitting between us and the exchange to say, are these guys like appropriately managing the money, and do they have the right security practices in place? That's not to say that Ethena obviously plays no role and we don't need to take that seriously. I think it's just, it looks slightly different to a normal DeFi application where all of the money is sitting on chain rather than sitting with a qualified custodian that you can underwrite. And I think this is actually a huge piece for like institutions that sit within the US, which is most of them require as standard, your assets need to be sitting within a custodian, right? A lot of them can't actually interact with even Aave as an example, but they can put their money when they know it's be sitting within a custodian. So I think that was a big piece in the sort of like C DeFi structure. It doesn't make a lot of the OGs and like the purest people happy, because it's not, pure DeFi that sits on chain. But actually for institutional investors, it's easier for them to underwrite that as a risk. I think the other piece was that we just also took security extremely seriously from day one. So before we even had a single dollar come into Ethena, we had 7 audits that were done on a pretty simple contract. And the team that we formed at Ethena on the engineering side had actually been through this process before. So our CTO was actually the CTO of BitMEX when Arthur built BitMEX. So he was the 5th employee that sat there. BitMEX never had a single issue when it came to security. managing billions of dollars through, multiple years running the exchange. So he basically came over as like the 5th employee from BitMEX, came into Ethena like very early on, and then basically helped us.
After you met with Arthur?
Yeah, exactly. And he had many years of learnings in terms of scaling an engineering team securely from 0 into hundreds of people. And he could sort of help and bring that experience to us doing things in the right way from day one at Ethena.
Yeah. Let's pivot the gear a little bit, talk about the most popular idea of the DAT. Could you talk about what's the DAT operation and practice right now surrounding the Ethena Foundation, and what is the plan?
Yeah, for sure. So just to recap for your listeners, in case they missed it, around 3 weeks ago, we came out with an announcement around a DAT that was going to be forming called Stablecoin X around Ethena. At a very high level, it was raising around $360 million, of which $260 million of that was cash. And what that enabled us to do was essentially create connective tissue between what we're building here and like institutional investors that sit within the NASDAQ in the US. At a super high level, like the thesis that I have is that the flows within crypto, as we've noticed in the last 2 years, I think are pretty unhealthy. And the reason I say that is that I think there's too many altcoins with too much inflation and there's not enough money to go around, and we're kind of shuffling the same chips back and forward to one another without finding like net new inflows that came in. And I think that's kind of been the story of the cycle, which is like BTC has gone up and to the right with all of the institutional flows that are coming through, and then altcoins have kind of slightly died against Bitcoin in the last 2 years. So the view that I have is actually like there are going to be 5 to 7 different, call it like Mag 7 businesses that come out of crypto. These things might be, exchanges like Hyperliquid. They might be money markets like Aave or stablecoins, like Sky or Ethena or whatever it is. But they're going to be businesses that TradFi can actually look at and go, this makes sense to me. This has real revenue. This has real users. It has a product that people are actually using. And that to them almost looks and feels a little bit like an equity that they're underwriting within the NASDAQ. And so for us, the thesis here is that like you could see the way that Circle performed after it launched. It ran up to $60 billion and traded at 300 times earnings. And then you have Ethena that's sitting there, which was trading at like at less than 10 or 15 times less than where Circle was sitting at. It's growing much quicker than Circle and producing revenue, which is comparable at the moment. And so the thesis here is that there is clearly excess demand within TradFi for exposure to the growth of like digital dollars and stablecoins. It is not the most important story within crypto. It's the most important story in the whole of finance right now. And there's no way for people to express that view. And so for us to be able to create this vehicle, which basically just gives easy access to institutional investors that sit within the US, we just think is an incredible way for us to address some of those flows issues that I was describing within alts more broadly. Yeah.
You mentioned that you don't want to do a equity rug for the Ethena project. So basically, I guess in the future, most of the economic benefit will direct to the ENA token. But could you in generally comment on that? Right now, does ENA token have any intrinsic value, and what's your plan for the future? How to connect with economic benefit?
Yeah, so it definitely does have value because we've made it 100% clear in the governance forums that there's no cash flow that's being taken from the protocol to any equity entity that sits on the side. So the labs entity, all these different entities have never received $1 that's ever been produced by Ethena. All of the cash flow that's produced by Ethena is to the benefit of USDe holders in SUSDe, to the reserve fund, which sits as like an insurance fund behind USDe, or ENA holders in general. The view that I have is that the opportunity size that sits ahead of us is so immense to grow this into like a $30 to $50 billion asset in the next 3 years. You want to, the lesson that we learned from Tether was that the upside of becoming the most dominant and the largest and the most liquid is so immense when you run for that upside that like trying to capture too many fees right now when you're still in a growth phase isn't necessarily the right decision to be making relative to what we view as like a $50 to $100 billion outcome if you do this right. And that doesn't mean that we're not going to capture any fees, but I think the way that we're thinking about things is like a very slow and gradual introduction of when we hit $15 billion of supply, you might take 5% of the yield and give it back to Ethena holders. When you hit 20 billion, you might take 10% and give it back, and slowly sort of ramp up that take rate as you're growing in terms of the supply. So we've sort of laid out in the governance forums the sort of thresholds and timelines that we're wanting to be able to hit to have some of that value captured. I think one thing to be 100% clear is that we're not sort of putting cash flow in a different pocket and keeping it to other people. Everything that's being produced now is to the benefit of Ethena. We just think that there is a timing and introduction piece to this where you don't necessarily want to capture as much value as you can now because you think the growth prospect ahead of you is just so immense.
I really respect your no equity rock attitude. To be honest, I think this is very rare in our industry. I found a lot of, successful founders, they sort of play the game between the equity and token, and they even, raise the capital separately between the equity and token. And in the end of the day, all the investors are confused.
Yeah. 100%. And I think it's very important in the cycle to show people that you actually care about your token. And it's not good enough to just say, we're not talking about it and we're not doing anything. I think the other piece on the DAT that you mentioned, which is worth touching on here, is that it was really the only DAT that was formed where 100% of the cash flow that was raised went to buying back the token on the open market. And so this is a very big piece to demonstrate to the market, I think, that we do care about the token. We're not just trying to do a raise where the foundation, raises $250 million and then sits on the cash and spends that money to themselves. We took 100% of the cash proceeds that were raised within that DAT, and we bought on the market alongside every single other person that was sitting there alongside us. So to us, that's like a strong demonstration that the foundation does care and is sitting there alongside the users.
Sorry, you mentioned the DAT proceeds is going to buy the Ethena token directly from the market instead of from foundation or from other investor?
Yeah, so what happened with the flow of funds, and this was in the public tweet that we put out, was that 260 million came into the vehicle. They bought locked tokens from the foundation, which went into the vehicle. And now the foundation has 260 mil of cash, and the foundation went out with 260 mil of cash and just bought Ethena on the open market with 260 mil. So that was like 8% of the circulating float was just immediately bought up by the foundation. And every single one of these deals that we're going to be doing going forward, if there is another DAT that comes out or another vehicle or whatever it is, we've already committed that 100% of all the proceeds that are coming through will be for open market buybacks.
Gotcha. Yeah. And could you talk about the Magnificent Seven? You mentioned like in crypto, there might be in the end of the day, a bunch of legit business over there. The project you just mentioned sounds like most of them are in fintech domain, Hyperliquid, Binance or Ethena, etc. In past, I think 2 cycles, a lot of founders, they want to get into the Web3 SocialFi, Web3 Uber, etc. But sounds like right now, until now, most of the legit business only happen in the Web3 fintech. So what is our take on that? Do you think Web3 can reshape the other industry or only finance?
Yeah, I don't want to be too negative on this and cynical because I'm just quite a cynical person normally. But I do actually think there's only a few business models that actually make sense in crypto, like at mega scale. I think it's like the exchanges. I think Tether, as an example. I think mining, if you do it well and you manage your leverage and stuff like that, can be a decent business. And then I think there's not that much. It's basically just facilitating speculation, finance, and dollars with stablecoins. I'm pretty negative around the ability for crypto to sort of change normal tech that sits outside of finance itself. I think we've kind of found the use cases that people actually use this stuff at like proper scale. And these are extremely valuable things that we're trying to disrupt, which is like finance and money. We don't need to try and disrupt everything. I think if you actually disrupt those 2 things that I just described there, they're 2 of the biggest markets that exist within the entire world right now. So yeah, I'm pretty negative on those things. I'm a pretty cynical person in general. I kind of think there's kind of 3 or 4 business models that make sense and can be worth 10, 50, $100 billion, and there will be businesses that look like that. And I'm just focused on disrupting the smaller segments that I know make sense, rather than trying to create net new markets which we don't even know exist. And I think that this is another learning that I had, which is it's much easier to go and try and disrupt. If you know that Tether can be worth $100 billion and Binance can be worth more than $100 billion, it's much easier when it's proven that in a growing and sort of chaotic industry, these business models work. It's much easier for you to go and say, I want to go and have, compete within something that actually works, rather than create a net new market, which you don't even know if the market makes sense at all. And so I think it just helps to reduce the probability of failure, I think, as an entrepreneur, when you're at least operating in a market that makes sense.
Yeah, I agree. To some extent, I think Web3 is a misleading word to mislead a lot of founders to want to reshape every single industry by the technology of the blockchain. Yeah, I think in the end of the day, pretty much, the crypto, the mandate or the product market fit would be reshape every single asset class. But that would be already big enough, right? Because every human being's civilization into the business, in the end of the day, will be some format of the asset class, like from cash to equity to bonds, etc.
100%, yeah. I mean, like finance, right, as a percentage of GDP in the US is like 15 to 20%. it's literally like a fifth of everything that we do in terms of the value that's created, like in the US. To go and disrupt that is a pretty big market, and like money itself is an even bigger market.
Yeah. Looking forward, how do you see the next chapter of Ethena and USDe?
Yeah, so I think it's just executing on like the DeFi, CeFi, TradFi piece that I laid out. I think we've scratched like 5 to 10% of the surface of what we can go and do. Like we're hardly integrated in most of CeFi. TradFi isn't like properly involved in what we're doing. And I think it's really a case of basically just executing on the plan that we have ahead of us. I think the one interesting thing that's coming up, which I'm personally interested in, is like the way that Ethena can benefit from the growth of like different derivative exchanges. So you might have seen there's like a project called Ethereal that's building on top of Ethena, which is doing like a perpetual exchange. And then there's another team who's building an exchange on Hyperliquid, which is all built on USDe. And the idea here is that you can redenominate the whole of Hyperliquid into USDe, and then we'd get some of the fees that are created on that market. So like you split the fees 50-50. I think this is pretty interesting. Like Ethena doesn't want to run in an internal exchange. I think that it's not appropriate. But I think having these different exchanges that are building on our products is an interesting way for us to grow revenue lines as well. So just to give you like a bit of perspective there, if even like 25 to 50% of the flows that sit on Hyperliquid's USDC right now moved over to USDe to use it as collateral rather than USDC, we'd be making like $120 to $250 million annualized cash flow that comes outside of that, which is like 25 to 50% of total flows at a 50% take rate. So I think there's huge like upside in initiatives like that. And I think there's a very natural, alignment between Ethena and exchanges, which is like we help to bring hedging flows onto the exchange. We make the exchange liquid and deep on the derivatives with all of the hedging flow that we have in the backing for USDe, and our ability to sort of like support and grow an exchange while they're helping to grow our USDe products, I think is a very sort of like healthy symbiotic relationship that benefits both sides. So I think that's one project area which I'm pretty excited about, where if the team that's sort of building the stuff on the Hyperliquid HIP3, if that takes off, I think it can be a pretty big upside from here. Yeah.
Okay, could you comment on what's the difference between your new coming exchange, Ethereal, versus the Hyperliquid?
Yeah, so Ethereal isn't like our exchange. It's just we have like maybe 7 projects that are building on Ethena USDe, and that's just one of the projects with an external team who's doing that. So the way that this normally works with Ethena and our projects is that they airdrop like a percentage of their token supply onto Ethena holders. So if you hold the token, you get all of the airdrops from these different projects. And this is basically, you can think about it a bit like Eigenlayer or like an L1.
Gotcha.
At some point, you kind of just want people to be building on your core product and compounding that innovation going forward. And that's all we're trying to support there. And yeah, this exchange is that, a team is sort of pitching us to do on Hyperliquid or Ethereal are just 2 different teams who are trying to do the same thing, which is build an exchange around USD. Yeah.
My last 2 questions would be, one is, can you give some advice for the new generation who want to get into the crypto and fintech, etc., and what would be your general advice to them?
It's pretty amazing that you can kind of get access to almost anyone, not quite like everyone, but like almost anyone within 2 connections on Twitter, basically. And if you put yourself out there and you write interesting things, you work hard and you try and have a differentiated view to other people, you can get access to almost anyone. And I think a lot of the people that we've hired at Ethena have just been cold DMs that I've received on Twitter where someone's gone, I love what you're building. I think you can do X, Y, Z. And we built a relationship from there. So I think there's no like easy solution to these things, but I think the cool thing about crypto is that actually people are much more accessible than you think they are if you're willing to do the work and have an interesting point of view. So if you're trying to crack in, I think that's one point of view. And then I think the other one is that the people who are drawn to crypto and a lot of the people in the space are like very quick money. There's a lot of scammers. There's a lot of untrustworthy people within the space. And all I can say is that everyone that I know who's done particularly well in the space has always avoided the temptation of taking quick money, because someone's always going to have that opportunity sitting in front of you, which is to break someone's trust and try to get the quick buck very quickly. And I think it's one of those spaces where you just need to survive and exist for like 5 or 10 years, and you're going to be doing pretty well on the other side of that. And I think just remember that your reputation is the single most important thing that you need to retain through this entire thing. And if you can do that and survive for 5 years plus, the space will be very generous to you. Yeah.
Gotcha. So basically, the first point is leverage the Twitter as much as possible, and second one would be long-term driven and delay gratification.
Yeah, and be honest and upfront with people, because I think there's a lot of dishonesty within the space, and it's very easy to make a quick buck and break people's trust. But all I'm saying is because everyone else is doing that, when you don't do that, it really sticks out. And I'm just saying that the outcome of doing that well is disproportionately larger than trying to make a quick buck in the beginning.
Yeah, that's very well said. The last one would be managing 12 billion AUM on the smart contract. Do you sleep well? And how do you maintain the high performing status every single day? Like, what is your daily routine?
I used to sleep quite badly. I actually sleep pretty well now. I think in the beginning I was like, how's this all going? Is it okay? So there's probably, around a month before I TGE and last year, I think I maybe slept like maximum 2 hours a night.
You worry about the Kim Jong-un from North Korea is watching you?
Yeah. And I think the cool thing now is, right, like when you've had 10 bills sitting in there for a while, if something was going to go wrong, it probably would have gone wrong already, if you know what I mean. It's a bit more like Lindy now. And so I sleep perfectly fine at night right now. My gym has gone off the cliff since I've started Athena. I think I put on like 10 kgs of weight, but I try still do that as much as I can. And my daily routine is just try to do 45 minutes of gym in the morning, and then I just work for 15 hours and then go to bed.
Okay, cool. Thank you, guys, for all those insightful sharing. And thank you very much.
Yeah, appreciate you having me on. Thanks so much. Cheers.
Well, that's all for today on Build It Up. We'll be back soon with another great guest. If you like this episode, leave a comment and let me know what you think. Until next time, this is Bill Chen. Goodbye and take care.